It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl?
Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have...
Okay, I'm placing in order to sell short euro at 118. Oops. Too late. Let's see again. Wait. I wanted to sell short for 118, 68.42. Okay, I will place right now in order to sell at 118, 68.2. Come on.
Completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. You know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get to Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers. Yep. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly.
I opened new position for euro. That's short position 118.682. Okay, new short position opened.
And I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars... 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've had some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company. But I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Wednesday, Hump Day, November 18th, 2020. We've got another step towards the COVID vaccine. More news from Pfizer. Stocks kind of meh about it all, but the rotation continuing with small caps leading the way. We're going to talk about that. We've also got a great lineup. We're taking you to the farm, the fiscal cliff facing Americans, and we're also going to explain why Spot, yes, Spot the dog, is in charge. We'll get to that in just a moment. First up, though, let's set the tone and the trading day on this Wednesday. What's up, Charlie Pellet?
Well, hello there. Market's not up. I'll tell you that, Carol Master. We've got the Dow, the S&P, NASDAQ all on the minus side right now. Investors weighing signs that scientists are making fast progress toward a coronavirus vaccine with news of fresh restrictions to curtail the spread. Right now, Pfizer up 1.4%. BioNTech is up 3.7%. Moderna, which had the big announcement Monday, down now by 4.4%. S&P trading lower, down.
I'm placing a stop on profit at 118.662.
Up 1.8%, 42.18 a barrel. Let the show begin. That's a Bloomberg Business Flash.
We now can. Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. It's brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So let's learn more about our market trade on this Wednesday. Let's set the Business Week agenda. Katie Greifeld is with us, cross-asset reporter at Bloomberg News, in our Bloomberg Interactive Brokers studio, along with Dave Wilson, stocks editor at Bloomberg News. He's on the remote access from New Jersey. Dave, first set the tone. Charlie breaking down those big numbers. I said it's kind of meh. on Wall Street, investors not really that much more impressed with the latest news from Pfizer.
Yeah, mess is a good way as any to put
It's a technical term.
Yeah, exactly. I mean, especially with the S&P 500 just bouncing off its lows for the day. I mean, yeah, there are some individual stories that are interesting. You know, some earnings reports that are moving stocks. The numbers out of Target went over well. The numbers out of Lowe's did not. So, you know, you're talking about with Target, one of the biggest gains in the S&P 500, and with Lowe's, one of the sharpest declines. In fact, the sharpest at the moment in the S&P 500. None of the 11 main industry groups in the index are up or down even 1%. You know, we're seeing some gains among energy stocks, but, you know, as a group, they're a little changed right now. You know, to the extent that there is an advance, though, it's sort of the more economically sensitive areas of the market, the value stocks, industrial, financial companies, raw material producers, and that's certainly consistent with what we've been seeing lately in sort of
Position closed, 118,662.
Companies, and that's what we kicked off the show. The rotation, Katie, it continues.
That's correct. It's still underway. It's still there, but it is evolving, I'll say. You know, the Russell 2000, it's still up, even though we are taking a leg lower here. It's up about 0.3%. And you look at the NASDAQ 100, it's down slightly now, but it's still up 0.3%. So it is still a rotation into small caps, but maybe not necessarily out of tech. And I think that's a really healthy sign, because when you think about how top heavy indexes like the S&P 500 are, you know, the big FANG names, they make up over 20% of the S&P 500. So if big tech falls, you're not going to see those indexes go anywhere. So the fact that
they just can't because of the weightings.
The math doesn't work out. So the fact that tech is sort of treading water here, that's a good sign. That means that you do get that breadth, and small beaten down areas of the market can rally, but the indexes will also gain.
Well, it's interesting. Go ahead, Dave. It sounds like you want to say something.
Oh, you know, I'm just actually...
Or maybe you were just sighing. I don't know.
Yeah, I tend to do that now and again, but I just put a chart out on Twitter that, you know, somebody else had. You talk about the NASDAQ 100 index. It's actually sort of been bouncing around above and below 12,000 going back to August, and sure enough, it's kind of struggling there again. You know, sometimes it seems like round numbers are like magnets for stocks. You know, how many years did the S&P 500 struggle to get above 1,000, let alone, you know, where we are now in the 3,000? So, you know, it's interesting to see that happen, and it's sort of consistent with the idea that, you know, the larger technology-oriented companies are kind of stumbling here.
I have to say, I always remember one market strategist, I think it was Joe Battipaglia of maybe he was with Gruntle at the time.
Yeah, he was there. I think a couple of other firms as well.
And I know he's passed, and we really miss speaking to him, but I just remember going around his office, and he had like when, I think it was the Dow hit like major marks, and it was just how long it took to go from like 1,000 to like just to move along. And then all of a sudden, we've just seen so many different, you know, top lines, Katie, taken out.
We're talking about 30,000 now on the Dow.
Which is just...
We're almost there.
Yeah, exactly. Well, anything interesting in terms of the virus rotation too, and the virus news? I mean, I really do feel like, Dave, come on in on this, because I do feel like a week ago, this past Monday, when we first got that Pfizer news, we were really enthusiastic. You saw investors piling in, risk trade was on. But we've gotten, you know, like we like to do at Bloomberg, you know, we're like, well, wait a minute though. There's a lot to go before we start to roll out that vaccine completely. And even though Moderna came out and we had another news, you know, some more news from Pfizer, it's good. It's what we expect. It's a progress, right? But it still is going to take some time. And we still have a market environment, a Main Street environment of small businesses that are struggling. And who knows what that's going to mean for the U.S. economy.
Yeah, absolutely. I mean, when you put it all together, I'm just looking at the S&P 500's main industry groups for November, so the month to date. You know, we've seen the S&P 500 itself up more than 10%, but you look at it's leading the way. I mean, it's the kind of companies we're sort of at the forefront today. You know, energy producers, industrial companies, raw material producers, financial stocks, you know, all beating the S&P 500 by pretty substantial margins. Technology kind of holding its own, but, you know, the other groups kind of touched by big tech, if you will, communication services, and that consumer discretionary category, which is really Amazon.com at this point, not quite keeping up.
Yeah.
So, what we're seeing today is what, consistent with what we've seen for the last few weeks anyway. I mean, as much as the issues for smaller companies are certainly out there, so far the market's kind of shrugging them off, it would seem, to some extent.
All right, so Dave is our true blue stock guy, but Katie, what we also like about having about you is you talk about the equity markets, but you also talk about, different kinds of assets that are out there, including the bond market. I saw there was a 20-year bond auction. Anything interesting in the trade there?
Well, I'm so happy to talk about bonds, and it's remarkable how even with that 20-year auction, bonds are...
If I had a nickel for every time someone said, I'm so happy to talk about bonds.
Yeah, there's a few of the people in this building who probably would agree with me, but bonds are totally unruffled this week, even with that big 20-year auction. The 10-year Treasury yield, it's moved in basically a 6 basis point range this week, which is really small, especially when you consider just the waves of good vaccine news we've been getting. But I think that gets back to those different timelines, that there's a lot of economic pain ahead potentially before we get a virus. And we heard from Fed Chair Powell yesterday. He didn't sound that optimistic. He said we have a long way to go in this recovery. It has significant downside risks in the near term. And he did acknowledge that even with a vaccine, that's medium-term good news. So I think bond traders are focused on that gloomy
He, like others, Jamie Dimon, there's a story like, we need some stimulus, folks. Let's get it done. All right, Katie Greifeld, thank you so much. Always fun to have you here. Katie Greifeld, cross-asset reporter at Bloomberg News. She's in our Bloomberg Interactive Broker studio, along with Bloomberg Stocks columnist Dave Wilson. He's on the Access line. He'll be back a little bit later on with his chart and stock of the day. I do just want to talk a little bit about our lineup. It's pretty amazing. We are going to talk a little bit more about that Pfizer news, the latest on COVID. Alyssa Rapp, CEO of Surgical Solutions, she's back. We're also going to talk agriculture. We're going to do that with the president and CEO of Mahindra Agriculture North America. They're seeing what's going on with the virus and how it's impacting really the farming industry and really tractors. That's where they play. We've got NVIDIA earnings after the close, and we're going to ask, what do these 5 companies have in common? We're talking about Intel, Walt Disney, General Mills, American Express, and Amgen. You're going to have to stick around for the answer. Got another question. Guess what our pets are training us to do? That is a big story in the magazine this week. And finally, her folklore continues to be made and told, and as only Bloomberg can do, we're going to dig into Taylor Swift as a bulletproof investment. All right, lots to come over the next 4 hours. Let's get a check, though, on world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Pfizer says its final analysis of clinical trial data shows its COVID-19 vaccine is 95% effective, paving the way for the company to be the first to apply for quick regulatory authorization for a coronavirus shot. And it could happen within days. Moderna says its vaccine is 94.5% effective. This is Health and Human Services Secretary Alex Azar.
By the end of December, we expect to have about 40 million doses of these 2 vaccines available for distribution, pending FDA authorization, enough to vaccinate about 20 million of our most vulnerable Americans.
He says the vaccine will likely be distributed through pharmacies across the country. Well, while the country waits for wide distribution of a vaccine, people continue to wait in long lines to be tested for coronavirus. But there is more encouraging news today. The FDA has approved a home testing kit that could give you results in 30 minutes or less. Dr. Ashish Shah is Dean of the Brown University School of Public Health.
I'm happy to see the FDA approving this. The problem right now is we don't know how many of these tests will be available, how long it'll take to get the tests out there.
The kit is expected to cost around $50, and consumers will need a prescription to acquire it. President-elect Joe Biden is meeting virtually with healthcare workers today. The nation will likely record its 250,000th death at some point today. Democrats appear to be uniting behind House Speaker Nancy Pelosi. Today they voted to stick with her as their leader and nominee for Speaker in the next legislative session. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Broker studio. Joining me, my buddy Charlie Pellet of Bloomberg News. And let's talk about some of the virus headlines. There's a bunch, and I know we're going to talk about one about the MTA, but we'll do that a little bit later. Certainly of interest to our New York listeners. But we do have a story about COVID ranging in long-term care centers at the fastest pace since May. This worries me, Charlie. This, we know, is among the most vulnerable populations. And in the first wave, these are the individuals, older individuals in long-term care centers, in nursing homes that really, really got hurt by COVID-19.
Carol, I saw this story and heartbreaking.
Yeah.
Absolutely heartbreaking is the word that comes to mind here. Heartbreaking because of the people who are in these long-term care centers who are truly among the most vulnerable, but heartbreaking as well because we're coming up on Thanksgiving. We're coming up on a lot of holidays for a lot of people. We're coming up on New Year's, and it just seems inevitable that there are going to be tighter restrictions on family members who want to share this great time of the year with loved ones. They're going to be told no.
Yeah, and I got to tell you, I'm going to talk about this with our next guest, Alyssa Rapp, and talk about, you know, how worried she is maybe about Thanksgiving, the holidays ultimately ending up being kind of super spreader events at some point when it comes to the fight against this. This story, though, about long-term care centers, less than 1% of the U.S. population lives in such homes, but check it out, everybody. COVID-19 fatalities inside of them account for 40% of the national death toll. Charlie, we know this. We've seen the headlines. But again, it's just a reminder. As you said, it's heartbreaking because these are the people who are really, really at risk.
Exactly. And also, too, just in terms of, we talked to a national audience. Ohio, if you're wondering, saw the largest increase last week, making up 10% of all new cases in facilities across the country.
In total, last week, states reporting more than 29,000 new COVID-19 cases in places such as nursing homes and assisted living facilities. Counts rose roughly 17% week over week, the steepest acceleration since May when we began tracking that data. So really, really tough. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and you are listening to Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story. This headline from the Bloomberg Professional Service. The New York City school system will temporarily close tomorrow. COVID, of course, rising caseload is the culprit. This, according to the New York Times. Worth repeating, New York City school system will temporarily close tomorrow. Equities lower right now across the board. The Dow, the S&P, and NASDAQ all trading lower. Let's begin with the NASDAQ 100 index down 0.2%. NASDAQ is down 0.2%. The S&P 500 index down 11, a drop there of 0.3%. The Dow down 60, a drop now of 0.2%. Should point out that the Russell 2000 does remain higher, up now by 0.2%. We've got the 10-year down 7/30 seconds, 10-year yield 0.88%. Gold down 0.5%, 18.71 the ounce, and West Texas Intermediate crude holding on to a gain of 0.9%, 41.81 a barrel. Those are the numbers. The reason here, stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. Repeating, New York City school system will temporarily close tomorrow. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed, and a big headline there, no doubt about it. Thank you so much, Charlie. Appreciate it. Well, so a lot of virus headlines today. Charlie, of course, just mentioning the New York Times saying that New York City schools to shut amid rising virus cases. That sounds like, as he said, a temporary shutdown. We're also reporting that's kind of the worrisome news, right? Although that's what you want to see cities kind of pull back as we start to see those numbers go up to try and rein them in. We've also had some upbeat news. Pfizer saying a final analysis of clinical trial data showing its vaccine was 95% effective. So that is helping to pave the way for the company to apply for the first U.S. regulatory authorization for a coronavirus shot within days. There is a lot going on. Talk about a self-testing kit for home, that happening in the United States. Over in Europe, though, you did see a protest over Germany's strategy to quell the virus turning violent. So, yeah, it's really rough out there. And this is a place environment we all know far too well. Back with us to see what she is seeing and concerned about is Alyssa Rapp, CEO of the healthcare solutions company Surgical Solutions. She is with us on the phone from Deerfield, Illinois. Alyssa, good to have you here. How are you? And when you see these headlines, you're out there in the Midwest. I mean, that's really been a tough spot.
It has, Carolyn. Thanks for having me back.
Yeah.
We've seen a rise and surge across the country, candidly. Our incidences of exposure or even positivity in our own company amongst our 250 employees across 9 states and 35 hospitals is pretty much even. We've seen additional, exposure or positivity in New York, Tennessee, Texas, Kentucky, and it is obviously back. I'm not an epidemiologist, as you know, so I know that the viral load of the virus changes over time, and it makes it easier to transmit. So hopefully people who are getting this version of this horrible COVID-19 flu are not going to be as sick if they're healthy and young, but it is back. The numbers are real. We're seeing it across the country.
Well, and it's interesting. We just talked about a story, Charlie Pellet and I, about how COVID is ravaging those long-term care centers, and we know that's where the elderly population is. We understand those numbers, but I was just talking to an individual here at Bloomberg and talked about her nephew succumbing to the virus. So we do understand that as much as we know some of COVID-19 is predictable, we also know that there are outliers, and we don't know still a lot about this virus. Having said that, the vaccine and the developments we've had over the last week and a half from Pfizer and from Moderna, what's your takeaway there?
Oh, I find it incredibly encouraging. I think the vaccines are going to be game changers, needless to say, and the only real question in my mind as a healthcare service provider is a question around distribution.
Right.
They need to be stored between 50 and 100 below Fahrenheit. Then obviously we need the military and FedEx and UPS working together on a combined distribution strategy that leverages single sites that have these massive freezers as well as mobile sites. And I think creativity and real genius in terms of logistics and planning is going to be what needs to happen between now and, say, April, May, June, when we get to true general population rollout of the virus. But for frontline healthcare workers, I'm still pretty bullish and optimistic, because if those vaccines can start happening in our major metropolises and major sites in December, the second shot in January, whether it's the Pfizer, Moderna, or any other vaccine, that means that if we can get first responders and frontline healthcare workers vaccinated, then the most at risk, then the rollout further, there should be an abatement of the spread, and it should provide some relief to our healthcare system.
Well, and you've got to be thinking, Alyssa, about your workers specifically, right? And making sure that they are frontline workers and they need to have access to this vaccine. I'm curious how you're approaching it. Would you make sure that they're among the first to get it? Are your workers comfortable getting it? And are you concerned about having access ultimately to the vaccine as we kind of try and figure out the distribution and logistics problems of getting the vaccine out?
Those are all great questions. I feel confident in our frontline healthcare workers' ability to get access to the vaccine because we follow each hospital's protocol for all things clinical when we work with our hospital partners, and if their frontline teams are going to be asked to vaccinate, ours will too. And so if it's being provided to hospitals across the country for their frontline workers, I am hopeful and confident we will get that access. And I think that the first 20 million doses of the vaccine seem pretty locked and loaded for December. So again, if we can make sure that that happens and nothing stops it, I think the frontline and first responders should be in good shape. It's really that next wave of rollout, Carol, that I personally am curious about once our frontline healthcare workers are taken care of and the countries after the prioritization for the elderly and the most at risk. How then do we ensure that mass distribution happens? I'm confident by the spring we'll have mass production of vaccine. Mass distribution becomes a bigger challenge.
Yeah, listen, I think about that too in terms of it getting out. And, we've done a lot of reporting about that's kind of our next big headache. And because, countries have relationships and deals with various drug makers, and so you really do wonder, what kind of horse trading might ultimately be going on, and that kind of terrifies me, especially when I think about people who really need it. When I think about developing markets, I mean, it's really going to be, I think, a logistics nightmare.
Globally, it's going to be challenging. And remember, the regular flu vaccine can be stored at 37 degrees Fahrenheit and below. And even that sometimes poses challenges. And this 100-degree below is a real thing. But I know that the biggest sites of points of distribution are already shoring up for those capabilities. I'm confident that in our country, specifically the ingenuity around distribution and logistics means that we should be able to come up with a mobile mechanism for distributing even this very unusually cold vaccine. So I'm hopeful. I think that we'll see a lot of opening up come next summer.
All right. Sit tight for a second, Alyssa. We'll come back and continue. Alyssa Rapp is with us, Chief Executive Officer, Surgical Solutions, on the phone from Deerfield, Illinois. I do want to see what she has to say about schools and just cities kind of quickly reacting to what's out there and how that might maybe help us in this process. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so just on the heels of that headline that New York City schools will close tomorrow, we are going to continue talking about the impact COVID is having on our economy here in the United States and the expectations about what life like is on basically the other side of COVID once we get through a vaccine. So we'll get to that a little bit more with Alyssa Rapp, CEO of Surgical Solutions, in just a moment. First up, though, back to your top business stories and Charlie Pellet.
Hi, thank you very much. That New York City news certainly not helping markets, Carol. The Dow, the S&P, and NASDAQ at or near session lows right now. Slight bounce off the bottom on the S&P. Let's get right to the numbers. I'll give you the why in a moment. The S&P down 15 now, a drop of 0.4%. The Dow is slumping 117 points, a drop there of 0.4%. NASDAQ down 24, a drop there of 0.2%. Both the Dow and the S&P retreating further from Monday's record. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadows signs that scientists are making fast progress toward a vaccine. Pfizer said a final analysis of clinical trial data showed its COVID-19 vaccine is 95% effective, paving the way for the company to apply for the first U.S. regulatory authorization for a coronavirus shot within days. The U.S. drug maker and partner BioNTech said their vaccine protected people of all ages and ethnicities with no significant safety problems so far in a trial that includes almost 44,000 participants. Shares of Pfizer, they're up today by 1.4%. BioNTech up by 3.5%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
It's exciting to see both these mRNA vaccines have similar data. I think it means that this is a platform that we can continue to explore moving forward with vaccine technology. And it was somewhat unknown before this. It hadn't gone through a full FDA approval process, and so I think everyone is really excited to see them push forward both to the EUA and ultimately to FDA approval.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And recapping, stocks lower across the board. 10-year down 630 seconds, the yield there 0.87%. Spot gold down 0.4%, 1873 the ounce. West Texas Intermediate crude up 1.1%, 41.88 a barrel. Recapping, S&P down 13, a drop of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Alyssa Rapp, CEO of the Healthcare Solutions Company. It is Surgical Solutions. She's still with us on the phone from Deerfield, Illinois. So, Alyssa, I know we've talked about schools. I know last time around we talked about, and I think you said that you don't think children are super spreaders because we were talking about schools reopening. I have to say, it's interesting. I'm getting a lot of emails from around the newsroom about, see, look, New York City schools are closing. I actually think cities are being smart, that as soon as they start to see numbers go up in certain regions around the country, as soon as they start to see those numbers go up, I mean, New York remembers how bad it was. And I think they quickly moved to say, we got to pull back. And that's how we hopefully can maybe prevent this from becoming New York City back in March, April, and May.
Yeah, there are two different questions, right, Carol? One is, are children super spreaders? And there's an abundance of data, and you've had many people on your show that have talked about how they may or may not be, and most likely aren't. But there are other stakeholders, and stakeholders are teachers and the elderly family members of children in schools who are living in multi-generational households. So I think the answer to whether to keep them open or closed is a function of from whose stakeholders' eyes you're looking. And I think that it's likely and probable that many public schools will end up closing post-Thanksgiving, pre-winter break, quote unquote, or even right after winter break, because as we discussed earlier, this vaccine access is likely going to be healthcare workers and first responders first, and then hopefully in the second wave, as soon as January even, teachers and others who we consider essential workers. So I'm hopeful that once teachers have access more broadly to the vaccine, then there'll be even greater comfort with keeping the schools open. But I think it's likely that to continue to, quote, flatten the curve, you can agree or disagree, but I think it's likely that schools will close for some portion of winter.
Yeah, and I guess what I was kind of saying is, I think I agree with you because just my own experience with my daughter in school, the schools have been, I feel like, knock on wood, we're not necessarily talking about colleges and universities, they have had their own struggles, but I think at large, things have actually gone fairly well. And I guess what is interesting is that you're seeing, whether it's the West Coast, whether it's here, major cities who saw it so badly in the springtime, like, we remember this. It wasn't that long ago, right? And we don't want to go back to it, so that you start to, as soon as you start to see those numbers go up, you kind of rein things in just to hopefully slow it down, and more importantly, hopefully to stop it from spiking once again into that kind of out of control area.
Yeah, and I think that it's also a function of how things have been managed, right? We're in a hybrid learning environment in our public school district here in the suburbs of Chicago, and all the children have plexiglass shields, everyone's masked, or classrooms 8 students or less. We certainly may end up in a virtual learning mode for a portion of winter, just like most public schools, but none of the transmission in our suburban school district has happened within the schools. It's happened from people bringing it in from the outside, so that gives, I think, many parents great comfort that schools are safe, kids are safe in schools. The community spread is going to be what it is. But again, I stand by my earlier claim that I don't personally believe from the data I've read that children under 10 are super spreaders by and large themselves. But I understand, when taking into account multiple stakeholder groups, why schools may choose, and public districts may choose to close for a portion of winter until these vaccines are more widely disseminated.
Right, well said. Hey, listen, I want to go back to something you said, Alyssa, because I think it's really important, and we've only got about a minute or so left here, about, you said logistically, we're going to need military in partnership with FedEx. People have been saying since March, April that we are at war. It's a health war, and we need kind of a military aspect and reaction to it, if you will. And we really kind of haven't gotten that. Do you think a new administration will move in that direction?
I think that it's likely that a new administration would be willing to leverage all tools at its disposal, including the U.S. military, to ensure the broadest dissemination of this vaccine as quickly as possible. And I also believe that our U.S. military is probably uniquely qualified to provide support to commercial parties like FedEx and UPS in that way. So I really hope for a public-private partnership in terms of distribution of the vaccine. I think it gives us the greatest probability of the greatest dissemination the fastest.
If we don't get that, what then? Just quickly.
I'm not thinking about it yet. I'm thinking positively here, Carol. We're going to get it done so we can have more normal lives by next summer.
Hallelujah. I'm an optimist too, and I'd like to get back to a more normal life. Alyssa, thank you so much for finding time once again for us. Alyssa Rapp, she is Chief Executive Officer of Surgical Solutions, joining us on the phone from Deerfield, Illinois. And again, watching those virus headlines, but optimistic about the vaccine, and ultimately, if we do it right in terms of how we get it out logistically and the distribution, we can move much closer and much faster to a more normal life. So that's what we're kind of all hoping for. All right, coming up, we're going to dig into the magazine. Got a story. It's about man's best friend, or friends, I should say, and how they're kind of telling us what to do. We'll get into that in just a moment. Let's get back to world and national news headlines. For that, over to Nancy Lyons in our D.C. newsroom. Hi, Nance.
Hey, Carol. The Trump campaign is still contesting votes, with the campaign seeking a partial recount of ballots in the swing state of Wisconsin. Trump officials have already wired $3 million to cover the cost. A full recount was estimated to run about $8 million. Joe Biden currently leads President Trump by more than 20,000 votes in Wisconsin. Well, as President Trump continues to challenge results in various states, he is still blocking President-elect Joe Biden from receiving national security briefings. Republican Senator Lindsey Graham does not agree with that approach.
The president is contesting the election, and I would urge him to give intel briefings to Joe Biden. How much further to go, I don't know. We're going to be fine. At the end of the day, this thing will work itself out. It always has, and it will here.
Control of the Senate remains on a knife's edge ahead of runoff races in Georgia. Bloomberg's Nathan Hager has the latest on that.
A new poll from the Fox station in Atlanta shows Republican Senator Kelly Loeffler essentially tied with her Democratic challenger Raphael Warnock, 48 to 49%. Republican Senator David Perdue and Democrat John Ossoff both get 49% support in their race. The poll also shows support for Republican Georgia Governor Brian Kemp slipping to 37%. President Trump has been accusing him and other state officials of mismanaging the November election. The runoff in Georgia is January 5th. In Washington, I'm Nathan Hager, Bloomberg Radio.
Nancy Pelosi is on track to be the next Speaker of the House. Democrats today voted to stick with her for that position. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Wednesday. Carol Massar joining me right now, once again, is Charlie Pellet. Listen, we've been talking about this story, right? Those of us who live in the New York metro area, New York City, commute in, commute out, kind of love our mass transportation. But man, Charlie, it might be headed for a really rough time.
The numbers are absolutely staggering today from the Metropolitan Transportation Authority. Says it might have to slash subways and buses by 40%. And
wait, 40%.
40%.
That's huge.
The cuts are unbelievable.
Yeah.
And that's just the buses, the subways that you see in New York City. We're talking about commuter rail, which would involve the Long Island Railroad. And for people who are not from the New York City area, also Metro North that extends up to Connecticut and also to the counties north of New York.
Gotta just say, it can't happen because once we get back to normal, we need mass transportation to work because the majority of New Yorkers or individuals who work in the New York metro area but come to New York to work, unless, that 40% are going to be working from home forever, we need them so that they can get back to the city and really help the city economy.
And also, too, there's the human component of this. Yes, people who use mass transit to get to and from work, they're watching these developments closely. But also the people, the men and women who work at the MTA, they might have to get rid of 9,300 jobs. However, and there is a big however, there's a major if in this story, and that is if aid does not come from Washington. So perhaps at one level, very much a New York City story in terms of the consequences. Ultimately, though, New York City looking to Washington for help.
Check this out, though. The MTA now estimating ridership will not reach 80% of pre-pandemic levels until 2024 in a best-case scenario. That's at least some data put out by McKinsey. Earlier projections, though, didn't anticipate returning to pre-pandemic levels till almost 2023. So not so great.
Very briefly, I ride the system on a virtually daily basis.
You are the voice of the New York subway system.
I'm seeing more and more people coming back to the subways.
Yeah, my daughter who's been on the subways, she says the same thing. It's getting much, much busier. All right, Charlie Pellet, thank you so much, the voice of New York subways. Charlie Pellet, this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower, small caps push higher. The Dow, the S&P, and NASDAQ bouncing off the bottom. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. The dollar nearing its lowest level in 2 years. S&P down 9 now. That's a drop of 0.3%. The Dow is down 67, also lower by 0.2%. NASDAQ down 5, a drop of less than 0.1%. 10 years down 7.30 seconds. 10-year yield 0.88%. Gold down 6.58 the ounce, a drop of 0.3% at 18.73. Talking about the price of spot gold. West Texas Intermediate crude up 1.1%, 41.90 a barrel on WTI. After earnings this morning, Target surging 4.7%. People stocking up. Lowe's Corporation, the home improvement retailer, heading the other direction, down now by 6.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. And the cover story this week, and I got to say, I don't know if I can say this, Joel Weber, can I just say I got a peek at the cover art?
You did last night.
I have to say it truly encapsulates the essence of this story.
Yeah, it's a fun one, and this is one that I think we've been interested in for a while because look, like the staff of Business Week has a lot of cats and dogs at home, and there have been acquisitions that were made during the pandemic. And if you have a dog and go to a dog park like I do, you also recognize that there were many, many, many more dogs in this neighborhood than there were before the pandemic. And one of the big beneficiaries of this has been Chewy, the online pet retailer that does pet deliveries, and that's what our story's about.
All right. So, of course, Bloomberg Business Week editor Joel Weber. Sorry, I jumped the gun there, but I wanted to bring you in because I love the cover. And let's also bring in Bloomberg News Wealth reporter Anders Mellin, reporting for Business Week and on the phone from Orlando, Florida. Joel on the phone from the remote access from Brooklyn. It is, and I got to say, Joel, it's one of those things in the shutdown that as I would walk my dog Scout around the very quiet neighborhood, I would see boxes of things, and I often saw Chewy boxes on the curb.
Yeah, and they're coming to our house too. It's actually in one of our story meetings. It turns out that there's a lot of co-op apartments in New York City that aren't supposed to have pets.
Oops.
And Chewy boxes are outing them because it's like, oh look,
where'd that come from?
A dog food delivery. Yeah, exactly. So the story of Chewy, though, I think it's one of these amazing ones because the company's been around for 9 years. Started basically by a couple guys who just realized they were going to get into the jewelry business, and then realized, wait a second, there could be a bigger opportunity in pets. And they basically scrapped it out for 9 years, and in the process of that, sort of faded from the company. And the company now has a new CEO, and the story sort of starts with Anders crunching some numbers and realizing that he's actually incredibly highly compensated. How highly compensated is he, Anders?
About 108 million for 2019. That's what brought me onto this story. We ran our highest paid CEOs list this summer, and Sumit Singh made 108 million last year. And I turned to my editor and said, "Who in the world is Sumit Singh?" And turns out he's the CEO of Chewy, and that's where it all started.
Right, and it's kind of like, what is Chewy? I have to say, we have a market guest who comes on, and every time she's like, buy Chewy, buy Chewy, buy Chewy. I mean, this is a business, and you put it in the story, Anders, that it's very much kind of akin to Amazon in its early days.
Yeah, it really is. It's what sets it apart from Amazon. Amazon was a model for much of the quickness, the ease, and the pricing. But what really sets Chewy apart is the fact that you actually have a customer service number to call, and if you call it, there's a person that responds to you within 6 seconds and is willing to talk to you 4 hours if that's what you feel like, about your pet, about pet food, about the fact that anything. I've heard stories of customer service agents who've literally been on the phone for several hours with pet owners that call in.
One of the things, Carol, that I think is really interesting about the business is, Amazon, when it started, it had that one area of expertise that it just nailed, which was books. It was like, how do we bring as many books as we possibly can online and do e-commerce as a bookstore, right?
Right.
And I think Chewy actually kind of like, it's almost like they surveyed the landscape and said, what's the thing that we could have recurring payments with that Amazon hasn't thought to do yet? And how do we figure out what that is and then do it at warp speed effectively? And they recognize that pets are this thing. The number in the story, $99 billion a year is being spent by Americans on pets. If you could get one slice of that, it's a great business. And what they figured out was that there's a lot of things that you can do that are recurring payments, whether it's dog food deliveries or medications, and all of those things are just cruise controlled. It's a subscription revenue model, and it has just allowed them to go sort of warp speed. And they were on a pretty good trajectory before the pandemic, and then the pandemic really played to it. And so, Anders, tell us about how they've really capitalized on everything this year.
Yeah, they've already, in the first 2 quarters, they added more customers than in all of the prior fiscal year. And they're on track to finally turn EBITDA positive this year. And they are also on track to hit roughly $7 billion in revenue, up from, if I don't misremember, around 4.9 in 2019. So it's really supercharged them this year. And they were sort of kind of like Peloton, just perfectly in position to take advantage of the coronavirus.
We've been buying our Scout. She's a little Irish Terrier, man. She's been getting toys, and we've got a subscription thing that we do every month too. And it's like, yep, we don't even think twice about it. We're like, it's essential. It's kind of crazy. So wait a minute though. We said they were like kind of Amazon, right? In many ways. And it sounds like they are too also like Amazon for a long time. They're not profitable.
Not yet. And, that's a story that is not too unfamiliar these days, that you set aside profitability and instead focus on growing very quickly. And that's what they did. And the founder, Ryan Cohen, and his team, they actually ripped the page out of Amazon's playbook and said, we're going to plow every dollar of free cash flow that we get into marketing and customer acquisition. But he points out in the story that at any point they could have turned off that marketing spigot and the company would have been profitable even back in 2015, 2016. So it's really about, running and getting scale as long as you can, as long as your capital base allows you to do that. And that's what they've done, and that's why they're so big today.
And actually, I love it because the CEO brought this up when you guys kind of put it to him, is this flywheel, this idea that, and it's a vaunted one that Amazon's really excelled, is sort of like once you can start spinning off cash, it feeds all the other aspirations that you have. What did he have to say about his flywheel?
Well, essentially saying that it's a very sturdy model as long as you're not burning too much cash, then that's something that you can keep up. And as long as you keep acquiring customers at a fast enough clip, then that flywheel keeps up. And thanks to Chewy's focus on auto ship and the fact that people have to return to them every once in a while to buy cat litter and food and so on, and you can put that on automation, that really helps to underwrite this whole model, and it works.
Anders, really quickly, so Sumit Singh, the CEO of Chewy, is up there with Elon Musk, Apple's Tim Cook, some other well-known CEOs as among the highest paid. Does he deserve to be there considering what he's done at the company? And just got about 30 seconds.
Well, I think if you bought Chewy right after the IPO and you still hold it now, I'm sure you're very happy, regardless of how much he got paid. We spoke to some former employees who pointed out that the company was in excellent shape already when he took over.
Interesting. So. Kind of feel bummed out for the two founders, though, man. It's a great read, and I told you got to check out the cover because I think I'm going to go home and frame it because it's just adorable. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Businesses coming up next. Our thanks to Joel Weber and Anders Mellon. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, November 18th, with the Dow, the S&P, NASDAQ all lower. Russell 2000 is advancing. We have seen NASDAQ swinging between gains and losses. Right to the numbers, give you the story in a moment. S&P down 10 now, drop there of 0.3%. We've got NASDAQ lower by 3, down less than 0.1%. NASDAQ 100 index, though, holding on to a gain of less than 0.1%. The Dow slumping 84 points now, lower by 0.3%. Stocks are declining as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. The 10-year down 6/32, 10-year yield 0.87%. Gold down 0.3%, 18.73 the ounce. West Texas Intermediate crude up 1.1%, 41.89 a barrel. Now, what about the economic recovery amid the pandemic and the Federal Reserve? Michael Kushma is Chief Investment Officer for Fixed Income at Morgan Stanley Investment Management.
I think the Fed has been clear about its intentions to support, provide accommodation, more accommodation if necessary, to get us to a stronger economy down the road. And they obviously can't put money directly in people's pockets, but they can do every possible measure to ensure the cost of putting money in people's pockets through borrowing is at very low levels, whether it's the household, the corporate sector, or the U.S. government.
J.P. Morgan Chase CEO Jamie Dimon says U.S. lawmakers are failing the country in their inability to reach a compromise on fiscal stimulus. Speaking at a virtual New York Times conference, Dimon put it like this, quote, "We have this big debate. Is it 2.2 trillion, 1.5 trillion? You got to be kidding me. Just split the baby and move on. This is childish behavior on the part of our politicians." J.P. Morgan shares, they're up today by 0.3%. Southwest Airlines has sent another 403 workers warnings that they could be furloughed as the carrier struggles to shave $500 million from labor costs. Southwest shares, they're up 1.8%. UAL up 2.9%. American up by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, you got to love when Jamie Dimon gets worked up.
Without a doubt, I could not agree with you more. And I think we'll have more on this story coming up for you later during the show.
There's a tease for you. All right, Charlie Pellet, thank you so much. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
All right, so this story definitely caught my attention. I was reading it pretty early this morning on my way into 731 Lexington here at Bloomberg headquarters. It's a top story in my view at this hour, since as we watch closely COVID-19's impact on our economy and its recovery, which has been so well described, I think, by Peter Atwater over at William Mary as the K-shaped recovery, which illustrates some Americans, they have been largely untouched by the pandemic. For others, the lower leg of the K, it has been catastrophic. And maybe there's some folks in between that as some of the relief efforts start to come undone and stop, they're going to be in a tough way. This story is among the most read on the Bloomberg. It is about the year-end fiscal cliffs that are approaching for millions of Americans. Let's get into it with Reed Pickert. She is U.S. economy reporter at Bloomberg, and she is joining us on the phone in New York City. Reed, this is an important story. I really do think everybody has to stop, listen, because if we're worried about kind of where we are because of COVID, if we're worried about what's going to happen in the economy, especially with the lack of stimulus, you really lay it out what's at risk. So first of all, give us the big picture.
Yeah, of course. And thank you so much for having me on to talk about this story.
Sure.
So I guess the big picture of this is that there is a wide range of programs that are scheduled to expire at the end of the year. And they range everything from two federal unemployment insurance plan programs to a national eviction moratorium to a freeze on student loans. And, you know, as you were talking about this K-shaped recovery, the people that are really going to feel the brunt of the pain from these expirations are really those who are currently still out of work. And these programs, you know, they have a wide range of use, but I would say the biggest impact is definitely going to be from the expiration of those two unemployment insurance programs.
12 million people, you say, right, Reed? Roughly 12 million?
Yes, so the Century Foundation put out a report this morning where they estimated it would be about 12 million people that would be cut off from their unemployment insurance on December 26th. And for these people, this has been an extraordinary lifeline during the pandemic. And it's two parts. There's the folks that, you know, prior to now wouldn't typically be eligible for jobless benefits, and those are the people who are on a program called Pandemic Unemployment Assistance, PUA. So that's your gig workers, your self-employed workers, and they have gotten these programs as these, a check each week that has helped support them during this time where, a lot of people aren't taking Ubers, and a lot of these jobs don't have the same kind of demand that they normally would. And then the other program is very similar to what we've seen in past recessions. It's called PEUC for short, but essentially it's an extension of jobless benefits for those who have exhausted their regular state benefits. So we saw this in the 2007 to 2009 recession as well. But whether people have used up the full number of weeks that they have or not, unless Congress acts, it's set to expire at the end of December as well.
Reed, and I want to go to some of the other, specific programs that you say, will come to an end and that really put a lot of Americans at risk. But the one thing I like about your story is, you go through these, you lay out the numbers, you lay out the research, but you also talk to Americans and what it means. Like, tell me about Larry Long of Willow Grove, Pennsylvania.
Yeah, of course. And I'd like to say that there were more people that, for space purposes, we couldn't fit them into the story. But Larry was someone that really stuck out to me. I chatted with him, and he's he's receiving the PUA, that unemployment assistance for those who aren't typically eligible. But he is a 63-year-old Black man in a town that's a little bit outside of Philadelphia. And before the pandemic, he made his income by basically helping to plan charity events and corporate parties. And as you can imagine, as soon as the pandemic hit, he said that for a couple weeks he was just receiving cancellation email after cancellation email. And so since then, he has been getting these pandemic unemployment assistance payments. And for the summer, it worked out okay because the CARES Act, which was the main fiscal relief bill that was passed back in March, provided this extra $600 a week in unemployment assistance. And when he had that extra $600, he was able to make it work. But as soon as those $600 payments ended and expired at the end of July, the bills have just been piling up. So when I was talking to him about what day-to-day looks like him for right now, he, said that with the amount that he's getting, he's really just trying to put food on the table. And he's has negotiated with his landlord to try to make a rent agreement payment, but he's really nervous about the culmination of running out of PUA, but also of the national eviction moratorium expiring at the end of the year as well.
Right. You said he's worried about losing his home, and he's also worried as you write in your story, he's an older Black man with a touch of diabetes, so he's scared to death just about survival. Hey, just quickly, just got about 30 or 40 seconds here on the tenant evictions. What do we need to know about that?
Yes, so on the evictions front, this is basically has been a national policy to keep people in their homes and prevent landlords from evicting their tenants when they couldn't fully pay. And that has been a saving grace for a lot of people. But the problem now, of course, is that eviction moratorium is set to expire at the end of the year. So people are heading into January, perhaps with several months behind them of not having fully paid their rent or not have paid their rent at all, and could very much face eviction because the fact is that the landlords have their bills to pay as well.
Yeah, we've talked about that with a lot of folks in the real estate industry. The problem is, I think about December 31st, right? People are often like, oh, a new year, thinking about what's to come, promising. And then for many, that's a deadline that could be really, really tough. I'm going to put your story out on Twitter because you go into all the programs and all the specifics. So thank you so much, Reed. Really appreciate you bringing it to us. Reed Pickert, she's U.S. economy reporter at Bloomberg News on the phone from New York. Let's get back to world and national news. For that, back to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, Pfizer is out with more results in its ongoing coronavirus vaccine study that suggests The shots are 95% effective. The company says the vaccine appears to protect older people who are most at risk at dying with COVID-19. The surprise announcement, just a week after it first revealed promising preliminary results, comes as the company is preparing within days to formally ask U.S. regulators to allow emergency use of the vaccine. Dr. William Schaffner with Vanderbilt University School of Medicine tells Bloomberg the real challenge now is to convince the public it's safe.
Can we communicate effectively to the general population when it is that they should show up for vaccination and have them respond? There are a lot of skeptical people out there, so the effectiveness and the safety of the vaccine will have to be clearly communicated.
While the country waits for a vaccine, the FDA has given a green light to the first COVID-19 testing kit to be used in the home. Lucira Health's all-in-one test kit is expected to cost around $50. You will need a prescription to buy it. Results are provided in 30 minutes or less. The FAA is giving Boeing's troubled 737 MAX the go-ahead for takeoff, with FAA Administrator Steve Dixon issuing an ungrounding order today after a 20-month investigation into flaws with the plane's design.
It's taken a long time and a lot of effort. We finally reached that point.
The plane was grounded when a safety feature meant to stop the plane from climbing too fast and stalling had improperly forced the nose of the plane down, causing 2 fatal crashes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser right here in our Bloomberg Interactive Brokers studio. Charlie Pellet joining me as well. And you teased this. We want to talk a little bit more about what is one of the most read stories on the Bloomberg today. Jamie Dimon of J.P. Morgan Chase, we all know who he is, saying U.S. lawmakers are failing the country in their inability to reach a compromise on fiscal stimulus. But he said it in a more colorful way.
Well, he did, and I'll repeat the quote. He said, quote, "Just split the baby and move on. This is childish behavior on the part of our politicians," referring to the size of the package being debated in Washington.
Yeah, exactly. And we've seen, Charlie, these talks over additional stimulus being stalled for months because of the both sides, meaning the Democrats and Republicans, coming together about the size and makeup of a package. He also went on to say, and what Jamie Dimon had to say plays right into what we just talked about with Reed Pickert, our U.S. economy reporter at Bloomberg News. She's got this incredible story out on the Bloomberg. I'll put it out on Twitter about year-end fiscal cliffs that are approaching for millions of Americans who are all of a sudden seeing all of these relief programs coming quickly to an end. And one individual she was just talking about, he's been just struggling to put food on the table for his family and is really worried about what it means when the rest of these relief programs come out. Jamie Dimon specifically saying, to this point, there's a big part of our country which is really struggling. That's what we should be focusing on. It has zero to do with Democrats and Republicans. It's got to do with helping those people get through the toughest part of COVID, and we're not through with it yet.
Indeed. As I read the story, I heard really cries of frustration with the process, because you got Dimon saying that he sees valid arguments on both sides, but he says a compromise should be attainable, and he says a lack of stimulus reduces the nation's prospects for having a good economic outcome. Further down, Carol, another nugget in our story. Dimon says he has never coveted the job of Treasury Secretary and will help whoever fills that position.
Yeah, so putting that aside, so we'll see what Jamie does maybe after J.P. Morgan. I do want to say he says also we need to get through the problem. Who's going to sit down and say, well, these won't survive and these will? We just don't have time to do that. So some really, I think, smart words, no doubt about it, and harsh words from Jamie Dimon. Thanks, Charlie. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are now trading mixed. We've got NASDAQ back on the plus side. It has been a choppy session. The Dow, the S&P, they are both lower. 43 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk. Lots going on. Here he is with today's afternoon call, Bill Maloney.
Mixed right now, well off their session highs. Dow's currently down 77 points. S&P's drop 8. NASDAQ gains 12. The U.S. 10-year yield at 0.87%. Gold trading lower by 7. Transports rise 19 points. And among the main 11 S&P sectors, industrials and materials led. Energy and utilities were under pressure. Leaders to the upside in the Dow, and Caterpillar and Salesforce. Chevron and Boeing led to the downside. And regarding earnings, Target beat estimates, traded to a record high. And in other news, Google to offer checking accounts with banks. And the New York City to shut schools after the virus infections reached a critical threshold. Wrapping things up, NVIDIA reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over NVIDIA as it breaks, and to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar in our Bloomberg Interactive Brokers studio. All right, everyone, we're having some technical problems, so our apologies for that. We were just briefly stepping into a press conference underway by New York City Mayor Bill de Blasio, giving an update on the virus in his city. Of course, the big headlines that we did get just moments ago, really at the start of our broadcast, was about New York City planning to close its public schools again as virus cases rise. Again, it's a big setback for the city's recovery. The school's chancellor, who said the nation's largest district would return to all remote learning. So again, their entire public school system will shutter. That will happen starting tomorrow, and putting that out, the school's chancellor, in an email to principals. All right, you are listening to Bloomberg Business Week, and I'm Carol Massar in our Bloomberg Interactive Brokers studio. It is time for Bloomberg Green. It is brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. All right, so we mentioned that the Bloomberg New Economy Forum has been happening. It was day 3 today, focused on climate, lots of smart conversations, no doubt about it. And with that in mind, we've got a climate ESG related question for you all. What do these 5 companies have in common? I'm talking about Intel, Walt Disney, General Mills, Amex, and Amgen. Well, here with an answer is Bloomberg News Executive Editor Tim Quenson. He joins us on the phone in New York City. Tim, thanks for your patience here. So talk to us a little bit about what those companies have in common.
Yeah, so Goldman Sachs put out a report. They called it the 2021 U.S. Equity Outlook, Roaring 20s Redux. And in it, they had an 8-page segment about ESG. And they used it to look at the S&P 500 and try to find, which companies scored the highest. They really looked at the environmental and social aspects of the companies, and they came up with a list of 50 companies.
Okay, and so they basically are picking those that are doing well. And I think ESG, as you know better than most, I feel like for a long time it was just it sounded like a nice thing to do, but it's gotten really serious. And so when we look at a list like this, especially as we know that customers, they care more about this when it comes to the companies that they work with.
Exactly. I mean, it's been amazing what's happened this year in socially responsible investing and ESG. I mean, there's been $28 billion of money that's been invested in ESG-focused funds this year. That's more than the 5 previous years combined. And that demand is only certainly going to increase with the election of Joe Biden, who's obviously much more environmentally friendly than Donald Trump has been. So, I mean, Goldman's premise is that that the demand is going to keep going, and statistically, they show that the companies with the highest E&S scores, environmental and social scores, have generated stronger returns than those with the lower scores.
So they're actually performing better in terms of financial numbers, financial metrics.
That's what Goldman reports. You know, there has been some debate on this, but they point out
No. Please continue.
They point to the MSCI ACY index, and they say that, you know, companies that score in the top quintile on ESG produce an annualized return of 11%, compared with 8% for those companies in the bottom quartile. And those companies include the ones that you mentioned at the beginning, Carol.
Yeah, and what's interesting, I don't know if you caught Alan Jope of Unilever up at the Bloomberg New Economy Forum. It was happening this morning, and I know it'll continue. But Alan Jope said something about Gen Zennials, which is a term I've heard of Gen X, I've heard of Gen Y, I've heard of Millennials, but he said Gen Zennials. He said they are the consumers of the future, and if you want to be relevant in the future, you have to think about them. And he's just kind of basically saying to companies out there, that's who you need to be thinking about, because they care about things in terms of how a company impacts their, the carbon footprint, how they impact the environment, whether they really are sustainable. The one thing I want to ask you, why I've got you here, Tim, is that the definition of ESG, and this is in your story, it's kind of, I feel like when people say, this is a natural food, it means kind of nothing. Organic, there are rules to it. So we kind of need to have the rules kind of be really clear, and I know we're working on that.
Exactly. I mean, I think organizations, including Bloomberg, is trying to work on a statistical way that you could, measure the various aspects. I mean, in the Goldman report, they say that the definition of ESG, is it broad and ambiguous and makes it difficult to assign a single rating to a company or to compare sustainability across industries and sectors. And also, the availability of ESG data in quality is uneven. But I mean, there's certainly a lot of firms that are taking this very seriously, including Bloomberg, to try to get their hands around presenting data where investors can say, all right, this number is pure. We know that this company is doing well on the ESG.
Right, whether it's equality, whether it's diversity. I mean, if you have clear, concise kind of metrics and ways to measure it, then you can kind of compare companies, and especially for investors where this matters, right? It's not just greenwashing and just saying we're doing good. You can actually show the numbers and be really transparent about it. Hey, Tim, thank you so much. I think it's a really important story. And thanks again, too, for your patience as we were kind of weaving in and out of some of the news of the day. Tim Quinson, his executive editor at Bloomberg News, joining us on the phone from New York City about Goldman picking its winners when it comes to the ESG sweepstakes. You're listening to Bloomberg Business Week. On the other side, we're going to get to Dave Wilson and his chart of the day. That's coming up on Bloomberg.
New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I'm Carol Masser in our Bloomberg Interactive Broker studio. I don't know about you, but I could kind of use a little bit of a music and a chart of the day just to cheer me up a little bit. So we're going to get to that in just a moment with Dave Wilson. So just stick around for that. First up, though, got to get back to Charlie Pellet and look at that trading day.
Here's what's going on. Busy day, lots going on with the Dow, the S&P, NASDAQ, all moving lower right now. NASDAQ has been swinging between gains and losses. 12-point drop right now, down about 0.1%. The S&P lower by 19. That is a drop of 0.5%. The Dow tumbling 181 points right now, a drop of 0.6%. As I look at the S&P chart, GIP screen on your Bloomberg, lower now by, in fact, the low of the day, down by 0.5%. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. 10-year yield 0.87%, gold down 0.5%, 1871 the ounce, and West Texas Intermediate crude up 0.9%, 41.80 a barrel. Dow member Boeing climbing after U.S. regulators ruled that the 737 MAX can safely return to the skies with an extensive package of fixes. Boeing shares trading lower now by 2.3%. Apple cutting by half the fees charged to most developers who sell software and services on the App Store. Apple down now by 0.1%. And Alphabet, parent of Google, has unveiled its long-anticipated expansion of Google Pay, partnering with banks and retailers to offer consumers new forms of bank accounts, cards, and discounts. Alphabet shares down 0.8%. 3:33 on Wall Street. Time now for the Small Business Report with John Tucker.
Katrina Brooks runs Black Pearl Books. This Black-owned bookseller has had some unique challenges during the pandemic, also seen business boom. Katrina, yours is an online bookstore, but there was still a big impact from the pandemic. Is that right?
It's an online bookstore. However, at the time, I wouldn't have considered us an online bookstore. It was really more about doing pop-ups and being in the community. The pandemic hit. All of the plans that we had, all of the events that we had scheduled out through March, April, May were obviously canceled.
Now, with the killing of George Floyd, how did business change?
This huge awakening of society took place. Our online traffic increased by like 200%. You know, this overnight thing where all of a sudden we started getting order after order after order. It really was people seeking knowledge, people being impacted by what they had seen and seeking knowledge about, you know, racism, anti-racism, social injustice. I've seen a different side of people. I've seen kindness. I've seen the coming together of people. I've seen the support, you know, not only for Black businesses, but for small businesses, for women-owned businesses. We've had people reach out and say, hey, I want to just come volunteer. I just want to help in any way that I can. I know that you were inundated with orders. You are a small business with limited resources. I just want to help, you know. And so we've seen the good side of it.
Katrina Brooks of Black Pearl Books in Austin, Texas. Thanks very much. And that is today's Bloomberg Small Business Report.
And John Tucker, we thank you again. Recapping stocks lower, S&P down 16, down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg. Oh, my God. I don't even need much for that. I know that guitar riff. That's Heart, who I've actually seen in concert recently. Dave. Is Dave there?
Yes. Listen to the song. Waiting for the tires.
Listen, every time I hear Heart, I go back to the Led Zeppelin honorees at the Kennedy Center honors that they do at the end of the year. And you remember when Led Zeppelin was honored? It was a few years ago. And Heart did Stairway to Heaven. And it will blow your mind if you haven't seen it. It is unbelievable. And John Bonner's son, he actually played the drums there. And it was just unbelievable.
Yeah, Jason Bonham.
Yeah, Jason Bonham.
who I have seen in concert, but that's another story for another day. Never got around to seeing Heart, though.
They were fun. It was a couple years ago. My husband saw like a revival, and he's like, it was a small place out in New Jersey. I want to say it was in maybe Englewood. They have a kind of a cool little theater there.
Yeah, Bergen Pack, if I'm not mistaken, is in Englewood.
And it was great. It was really fun. Anyway, so great song related to your chart and what we need to know.
Well, it's all about sort of evening up between larger and smaller companies. And it's inspired by the latest blog post from Liz Ann Saunders, who's the chief investment strategist at Charles Schwab. She came out with it yesterday and noted that she was ending a recommendation that investors favor larger companies, think the S&P 500, over smaller ones, think the Russell 2000 index. So in other words, overweight the large caps, underweight the small caps. Basically, that was the call, and she just took it off. I mean, basically saying that there isn't really that much difference between the two at this point, at least not enough to justify favoring the larger companies. And so what I did is looked at the ratio between the S&P 500 and the Russell 2000. And this is a call she made back in March 2017 initially, so the chart goes back to the start of that year. And what you see is that this year the ratio has been, shall we say, volatile. You know, back in February and March when we were in the middle of the bear market, short-lived bear market, you saw the ratio jump as much as 22%. So if investors wanted to own any stocks, they wanted to own the shares of the larger companies, the S&P 500 companies. And since then, we have seen that entire gain practically been given back. So
that's huge.
The timing was interesting in the context of the volatility that we've seen in this particular ratio, which is really highlighted in the chart what the last few months are. And if you want to know more, folks, send me an email. I'll get it to you, the chart and the explanation that goes with it and everything I do going forward. Send me an email at dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Ann and Nancy Wilson. They're like incredible. I can't believe you've never seen them live. Do you have a favorite song?
Well, Barracuda is one that comes to mind.
Yeah.
Absolutely. And you know, you talk about, I think it was a VH1 Honors. I remember Gretchen Wilson doing a version of Barracuda with Alice in Chains and Nancy Wilson playing guitar.
I bet it was really cool.
Oh, it was something. You should look that one up on YouTube sometime when you get a chance.
All right. I just tweeted out the Kennedy Center honors when Hart did Stairway to Heaven honoring Led Zeppelin. So I'll look up that one, Dave, as well. I'm going to go down a rabbit hole. You can see it coming, right?
Absolutely.
All right. Dave Wilson, thank you so much. Always appreciate it. Check out the One Dave on Twitter for Dave's chart of the day. Really good one. And what we've been talking about a lot, that small cap, large cap kind of back and forth that we've been seeing. So interesting to see Schwab's call on that. All right. You are listening to Bloomberg Business Week. We've got about 20 seconds left. 20 seconds. Scared you there for a minute. 20 minutes left in today's trading session. So we're going to count you down to the closing bell and get to that shortly. In the meantime, we do want to do another check on world and national news. A lot going on. Over to Nancy Lyons we go once again in D.C. Hey, Nance.
Hey, Carol. Well, drug maker Pfizer says after attaining 95% effectiveness for its COVID-19 vaccine, it will now apply for regulators' approval within days. Bloomberg's Irv Chapman has more from Washington.
Daily average of U.S. cases has topped 150,000 and could increase further depending on how Americans handle Thanksgiving and Christmas celebrations. Dr. Stephen Corwin, chief executive of New York Presbyterian Hospital, said in a Bloomberg interview.
Now you're seeing this across the entire country. When New York went through this crisis, we received staffing help from around the country. That's not going to be available for many of the health systems now because we're seeing it across the entire country.
Dr. Corwin said the goal line is in sight for next spring, thanks to the rapid development of vaccines, which he called a remarkable scientific achievement. In Washington, Irv Chapman, Bloomberg Radio.
Well, for the city of New York, the vaccine can't come soon enough. Today, the city's school system, the nation's largest, announced it will close all in-person learning due to the rising coronavirus infections. President-elect Joe Biden has been holding a roundtable with healthcare workers this afternoon, telling them that the Trump administration's refusal to start the transition process will be costly.
There's a whole lot of things that we just don't have available to us, which unless it's made available soon, we're going to be behind by weeks or months.
Biden says he does know the nation's stockpiles of personal protective equipment have been seriously depleted. The Minnesota Timberwolves own the #1 pick in tonight's NBA draft. Because of the pandemic, this year's draft will take place entirely online. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Brokers studio. Charlie Pellet also with me. This story by Sri Natarajan. Love his reporting. And it kicks off, Charlie, saying the days of job security on Wall Street, they were short-lived.
Yeah, indeed. Goldman Sachs' second round of several hundred firings in the course of 3 months. Just another sign that the pandemic pause on layoffs just kicked the cost-cutting can down the road. Goldman, Carol, not alone.
No, exactly. And, remember kind of as we got into the virus and got into COVID back in spring, a lot of companies were out there saying, don't worry about it, your jobs are safe. And so they even did some hiring of new college graduates. It brought the sharpest surge in the head count on Wall Street of the 6 biggest U.S. banks since the financial crisis spurred a series of mergers. The firm's adding, check this out, Charlie, almost 32,000 workers in the first 9 months of the year, led by 15,000 at Bank of America, which is sticking by its no layoffs promise for 2020. But as this pandemic drags on, we've got banks increasingly stepping up and saying, we got to cut costs, we've got to let workers go.
Indeed, though. But, Carol, it comes also, too, as mortgage rates continue to tumble, and you've got banks adding mortgage workers. Just want to point out, too, that as the pandemic drags on, a couple of the big companies, for instance, at Goldman, you've got a new CEO there, David Solomon on board, also Wells Fargo, Charlie Scharf. Job #1 for them, cutting costs.
But I'm just going to point out that, I think there's been some concerns, but we've seen fairly decent numbers on Wall Street. And I do wonder about, we've had a lot of companies, the big banks, pledge multiple stakeholders when they think about running their firm. And I do think about the stakeholders that are the employees and what this means and whether or not they're paying too much attention to what's going on in share prices, because we are seeing pressure. The 4 biggest banks have all fallen more than 14% in a year when the S&P 500 is up 12%. So I wonder if big banks are paying more attention to shareholders versus kind of all of their stakeholders, including their employees.
Indeed. Well-intentioned promise, though, laid by the wayside.
Yeah, well, this year has been a tough one, and certainly some promises it's sometimes hard to keep. Certainly seeing that play out. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell on this Wednesday. The Dow, the S&P, NASDAQ, all in retreat. NASDAQ 100 index just turning negative. Russell 2000 also on the minus side. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. On a down day for the rest of the market, we've got shares of Pfizer and BioNTech also moving higher right now. 4% jump there for BioNTech. As for Pfizer, it is up by 1%. The S&P did fall to session lows after New York City shut schools because of rising infections. S&P down 25, a drop now of 0.7%. The Dow down 214 points, down 0.7%. NASDAQ down 51 points, a drop there of 0.4%. Little bounce off the bottom on the S&P, but again down by 0.7%. 10-year down 4/32, 10-year yield 0.87%. Gold lower by 0.6%, $18.69 the ounce. Crude up just about 0.7%, $41.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Back with us is Craig Hodges, CEO and portfolio manager of the Hodges Funds, $1.5 billion in assets under management based in Dallas, and joining us on the phone from there on a day, Wednesday, where we've got stocks pretty much hovering at their lows of the session. So we're down about, as Charlie mentioned, down about 0.9% on the Dow Jones Industrial Average, down 279 points. S&P 500 also down almost 0.9% at 3578, and the NASDAQ just down about 0.5%, down 65 points. So Craig Hodges, nice to have you here. How are you doing? I know there's been some rough COVID numbers out in Dallas. I've got a bunch of family out in Texas. How are you doing?
Yeah, doing well. We've been pretty fortunate not to get hit too hard, and I think it's fairly under control here. But the numbers you see do scare you, so you have to continue to take heed, if you will.
Yeah, exactly. Well, what does it mean for investors? Do they have to take heed as well?
I think that they do. We've had an interesting situation. We manage money and we handle a lot of individual accounts, probably over 600. And I think throughout the industry, what you saw around the election time, starting at about September, is people raise a pretty good cash position in their accounts, not to predict what would happen, but just because of the volatility and the uncertainty of it. Well, there wasn't hardly any volatility, and the market has continued to move up. So I believe what's happened since the election, even though it hasn't been finalized, although everyone knows what will happen, is that people are putting that money back to work. So I think that's what's driven the market here in the last month or so. That being said, I think it's probably a little ahead of itself. I did a conference call with a bunch of great money managers last night, and the optimism was flowing. And anytime you see that,
makes me want to run for the exit.
Exactly. So I don't look for anything terrible, but I think the market could be a little ahead of itself.
Why are money managers so enthusiastic? What were they saying on that call?
Well, there's been so much disruption in the marketplace, and there's been stocks that have done fantastic this last year and a half, and there's been stocks that have done horribly, and you're starting to see the ones
that makes a market, right?
Yeah, and the ones that have lagged, that still have good business opportunities, are really starting to perform. So I think, and that's what a lot of these people, and not everyone is in the FANG and the top 6 stocks that have driven everything. There's another market out there that's kind of been the have-nots, if you will, and so and that's what we're doing here at Hodges Funds and Hodges Capital. Is there's just a bevy of stocks that have not participated that you're starting to see all of a sudden get some breath and start to move.
How frustrated, though, are you guys to be in the small cap space? And I know they're starting to have their day a little bit, but I'm looking at your Hodges Small Cap Fund. You're up about 3.5%. It's been a struggle.
It has been a struggle for, going on 3 years. And although I will say this, I noticed that the small cap performance, the Russell 2000, 81% of the stocks in the Russell 2000 are above their 200-day moving average on the chart, being very technically, a positive. That's the most since 2013. So it really looks like things are starting to turn. And these things go in cycles, and it's very understandable why the large cap stocks have moved so well. It's been basically the ETF craze that's driven a lot of that. But there will be a time and place for small caps, and we really and they've had really nice outperformance for, I'd say, about the past 2 months or so.
All right, interesting. So talk to us about some of the names, because my understanding is among the major themes that you are interested in is kind of deurbanization and businesses related to that. What specifically are you talking about? Are you talking about the exodus from cities?
Yeah, you're seeing because
you believe that's really going to stick?
Oh my gosh! Well, you saw this in the 70s happen, and it lasted for anywhere from 5 to 8 years, depending on the data.
But it was miserable in the cities. There was crises, and so on and so forth. I mean,
well, it's not just the unrest and the COVID that's driving people out. It's the fact that all of a sudden, you don't have to have an hour and a half commute to get to work. You can work from home, or you can live 2 states away and live wherever you want and still work at whatever firm. I've seen where 30% of the companies out there are saying they'll never bring these people back into the office. They'll let them work remotely. So that's going to drive people to the suburbs. And you add on the fact that you have historically low interest rates. The millennials, which is the biggest demographic in the history of the world, they're now at that age. They're now at that age where they're moving out, they're getting married, they're buying homes, and it's also economic in that it's much better financially to own than to rent, especially with these low rates. And then we've got this shortage of housing. So it's not just the housing stocks that we like, it's everything related to those. You're talking about your retailers like Home Depot and Lowe's and companies that do lawn and gardening and remodeling and things like that. Even like the home gym business is a phenomenal thing that's happened. Pets and pet supplies and all these things. The mattress business is really booming right now. And so there's many ways to play this thing. And like I said, I think this will last for years and not just be a flash in the pan, if you will.
All right. So if you had to commit new money, one of the new names or one of the names you like is Taylor Morrison. You would be committing to money there?
Yes, we would. They're in great markets. It's one of the least expensive, trading right around book value. And you've seen most of these home builders have made tremendous moves, and it's made a good move.
I mean, it's up 15% so far this year. We've seen, you're right, the home builders have really been on a rise, low mortgage rates, and as you said, some of the trends of people moving out, and also the supply has been down.
Yeah, and historically, these things are feast or famine. But like I said, I think because of the shortage and because of about a 3-month supply of housing, I think this is a trend that's going to last for a considerable time. So, and they're still very inexpensive. These stocks are some of the most inexpensive of the entire market.
Yeah, Taylor Morrison's got a forward-looking PE of about not quite 11, just under it, and a current PE of about 6.6. Interesting. Just quickly, 30 seconds. Rocket Mortgage, same story.
Yeah, we believe Rocket will be the dominant, brand in mortgage and refinancing, and they have unbelievable scale opportunities in that company. And they're not just a refinance firm; they're actually, because of young people being more comfortable with doing everything on their phones, there's more and more people going this route. They think their market share will go from 10, where it is now, to 25% by 2030, and that will be a juggernaut of a company.
$42 billion market cap company. That's pretty remarkable. Going to leave it there. Really appreciate it. Craig Hodges, CEO, Portfolio Manager of the Hodges Funds, on the phone from Dallas. Stick around. We've got the closing bell in just about 3.5 minutes' time. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There it is, sound of the closing bell at the New York Stock Exchange. Final hour fade. The Dow, the S&P, and NASDAQ closing decidedly at the worst level of the day. First, we begin with a headline from the Bloomberg Professional Service. Fannie Mae and Freddie Mac will be required by their regulator to hold hundreds of billions of dollars in capital to protect against losses, a step considered crucial to freeing the mortgage giants from U.S. control. The Federal Housing Finance Agency rule finalized today stipulates how much of a capital cushion the companies will have to retain against their assets as fully private entities in order to weather a financial crisis. The Dow, the S&P, and NASDAQ slumped as fresh restrictions to curtail the spread of coronavirus overshadowed signs that scientists are making fast progress toward a vaccine. Dollar neared its lowest level in 2 years. S&P down 41, a drop of 1.2%. The Dow down 345, down 1.2%. NASDAQ down 97, a drop of 0.8%. 10-year down 5/30 seconds. 10-year yield 0.87%. Russell 2000 tumbled along with the rest of the market today, down by 1.3%. Craig Hodges is the CEO and portfolio manager at Hodges Funds, where he focuses on shares of small cap companies. He was our guest moments ago right here on Bloomberg Business Week.
The small cap performance, the Russell 2000, 81% of the stocks in the Russell 2000 are above their 200-day moving average on the chart, being very technically, a positive. That's the most since 2013. So it really looks like things are starting to turn.
A surge today for Tesla. Morgan Stanley gave Tesla an overweight rating for the first time in more than 3 years. Tesla rallying today by just about 10.2%. After earnings, Target up 2.2%, Lowe's down 8.2%. Down day on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say. Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
Yeah, time to do some shaking here on Bloomberg Business Week. I'm Carol Massar, along with Bloomberg News cross-asset reporter Sarah Ponzak. And we're going to talk a little bit about the markets. Don't forget, we've got NVIDIA coming out after the close. We'll bring you those numbers as soon as they cross. Big picture, let's start there. It was predominantly a risk-off trade. 104 names, though, in the S&P 500, still managing to eke out some gains. We had 398 lower, 4 unchanged. Taking a look at the major industry groups in the S&P 500, there are 11. They were all down. Best performer, industrials, but still down about 0.5%. Consumer discretionary, second best performer, still down about 0.8%. Bottom of the pack, energy, man. They just cannot get a break. It was down about 2.9% as a whole. All right, Sarah Ponzak, where shall we begin?
So we've had some sobering headlines coming out. And first, we need to set the stage.
You're talking about the virus.
Yes, about COVID-19. One, New York City, living here. Schools are now shutting down. You have to wonder, all right, well, then what comes next? We have reminiscence memories of back to March when this kind of all began.
Can I just say, I see it as partly not a positive, but it's officials understanding how bad this can get and trying to stop it before it gets to that level where hospitals and healthcare systems are maxed out, and we're back to where we were in March, April. I'm not saying, it's just kind of my take on it. Like, we've learned something.
We've
but
learned
still,
plenty.
It's not
Absolutely.
good.
And there's also now this idea that we know the vaccine is coming one day.
Right.
And we've had great statistics on efficacy from Pfizer, also from Moderna. So that's also something to look forward to, which is much of the reason that investors have been able to remain so optimistic. But how optimistic can you remain for how long? Consider the fact that the Russell 2000, yes, it did close lower today along with the other major benchmarks.
Right.
On track for its best month since 2000. So by no means has November been a rocky month of, if anything, even with the election, even with rising restrictions, COVID-19
Pretty remarkable,
cases,
right?
It is very remarkable. The market has been remarkable all year long, let's face it. But the fact of the matter is, we see these headlines on New York City. We also have Delta saying today, executives there saying that, yes, we have a vaccine, but that's not likely to boost travel in the near term. And I think that kind of spreads itself to other industries too, that yes, while we have something to look forward to, Who knows how long from now? A couple months, maybe a couple of quarters. We're not sure. But until then, it's going to be difficult.
Right. Like we've gotten more information. We're moving closer to a vaccine, but then there's distribution, logistics. It's still a long way between, they're going to give it to the frontline workers and the most vulnerable, which they should. But as we've all been talking, we just don't quite know when it reaches the masses. The other thing I think about Delta and anybody in the hospitality industry, the all-important business traveler, right? That is so lucrative to their bottom line. That's not going to come back for a while.
Right. Delta, they said that international travel, too, they don't really see coming back likely until 2022. That is...
The Caribbean wants us, though. Do you know that? There was a great story in the Bloomberg that the Caribbean is trying to bring everybody in to come work from home in the Caribbean. They don't really have virus cases because they've shut down their border. I'm just putting it out there.
I didn't see that, but it sounds like a great idea. Let's do it, girl.
It's totally a good idea. But you make a good point. So where does that leave us then in terms of market movement, market direction at this point?
It leaves us almost in this nowhere land. But at the same time, if you look at sentiment data, AAII data, the latest Bank of America Fund Manager survey, positioning has started to look very optimistic. And it makes you wonder that if all of a sudden, if we start getting this wave of negative headlines and people start feeling it in a personal way too, if your personal lives start being affected even more than they already have this year, it makes you wonder if there's already this built-in optimism, how much can this market truly take? And that's why we've discussed it before. Some strategists are now starting to turn tactically bearish. They say, I don't understand how we can continue at this pace.
It's like you were listening to my conversation at 3:45. It was our market guest, Chris Hodges, and he said, listen, I had a call with money managers, really smart group, but they were so optimistic. And he said, that makes me nervous.
Right. When everyone is at one end of the table, the contrarian side of that is, I'm not so sure. But at the same time, you can make that case throughout the year. There have been plenty of times throughout 2020 that I have heard the case made that people are so optimistic. So then how optimistic can you truly be? And here we are, how many months later, with a market that has just run up. And if you have been bearish or sat out, clearly you've had a hard time.
The thing that breaks my heart, though, is if you're in the market, in the financial market, you've got a 401k, you're at this point feeling okay. But for a lot of Americans who are not, we talk about Main Street, they are getting hurt really hard. Reed Pickard has a great story, troubling story about it, about kind of the fiscal cliff for so many Americans. Quickly, retailers, Target up 2.3% today.
Right, so Target on one end reported earnings absolutely blew it out of the water. And you also have to keep in mind that Target, too, is up about 30% this year. So Target has performed well all year long. It's kind of been one of these
What's not to love about Target?
Right, what's not? Especially when you pronounce it like that.
Lowe's, though, the other direction.
Right, so Lowe's was actually the worst performing stock in the S&P 500, down 8%. Lowe's has also been one of these COVID-19 beneficiaries, but they've had expenses piling up. This is not a Lowe's alone story. We have seen this kind of across the board with some of these companies that while they've seen demand explode, they've seen expenses increase as well during COVID.
All right. Good stuff as always. Sarah Ponzek, thank you so much. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, Dave Wilson, come on in on your stock of the day. Ticker is TEX.
Terex. It's a maker of cranes, work platforms, other industrial equipment. The company's been listed on the New York Stock Exchange since 1991, and yes, the ticker is TEX. It's been around since 1933. Now, as far as the shares go, they set a record in 2007, plunged as stocks entered a bear market that year, and have swung at lower levels ever since. Terex fell in May to its lowest price since October 2011, and since then, it's more than doubled. The rally was aided today by Citigroup, where analyst Timothy Thine recommended buying the stock for the first time since he began coverage in 2014. Thine raised his rating on Terex to buy from neutral based on a more favorable sales outlook for next year. He wrote in a note that he's looking for 20% growth, judging by contacts with suppliers and equipment makers. Terex rose as much as 8.2% to reach its highest price since July of last year. The shares pulled back as the day went on. They did close, though, with a gain of 4%.
I'm so sorry I made you rush. We'll give you more time tomorrow. You got your workout today. All right, Dave Wilson, thank you so much with his stock of the day. It is Terex, T-E-X. Let's get back to world and national news. For that, this time around, we're checking in with Ed Baxter. He is in San Francisco. Hi, Ed.
Hi there, Carol. Bad news. New York City schools reclosing tomorrow.
We do need to close our schools for the coming days.
No one is happy about this decision. We all, in fact, are feeling very sad about this decision.
Yeah, Mayor Bill de Blasio says the 3% positivity rate has been reached. He says the city will continue to monitor. President-elect Joe Biden says as he learns more about what has been going on at the White House, he realizes how little has been done about COVID-19. But he says his administration now needs stockpile numbers at least.
There's a whole lot of things that we just don't have available to us, which unless it's made available soon, we're going to be behind by weeks or months.
And he says Republicans need now to stand up to the president. And there are some cracks. Senator Lindsey Graham has been a strong Trump ally, but...
And I would urge him to give intel briefings to Joe Biden. How much further to go, I don't know. We're going to be fine. At the end of the day, this thing will work itself out.
Yeah, but he says it needs to be worked on, and he thinks information should be shared. Meanwhile, while lines to get COVID tests continue to form, announcement that the FDA has approved a new home test now, and Dr. Brownstein says it's going to be a great success.
This is essentially a game changer, especially because the accuracy of this test is well over 90%. So it looks good against other sort of more traditional methods.
Dr. John Brownstein, ABC contributor, says results there at home, you will need a prescription. And Democrats are sticking with Nancy Pelosi. It will need to go to the full House. An attorney for Joe Biden says Georgia counties have finished their recount ahead of schedule. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with Charlie Pellet. The market is closed. One name, though, that we definitely watched throughout the session, Charlie, was Boeing.
Yeah, exactly. And you know what? I'm going to give you a two-word question. Here we go.
Uh-oh, pressure. Is this like
exactly.
Jeopardy?
Yeah, would you?
Go ahead. I'm ready.
That's it. That was the question. Would you?
What? Oh, flying. You know, my dad was an electrical engineer, worked in the aeronautical industry, in the space industry. And he used to say the time to fly on a plane was when right after something went wrong, whether an engine or there was a problem, because that's when everybody was at their A game and that's when everything was going to be working right. So I'm just going to put that out there. So I don't know.
I'm
sorry,
thrilled.
Dad.
You know what? I'm number one, I totally agree with what your dad said. Number two, I'm glad that you and I have worked together long enough that you knew exactly where I was going with the question. Probably the audience did too. It was
I'm
obvious.
a little scared that I'm on the same plane as you, Charlie Pellet. I'm just going to put it out there. Even though with this news, if you take a look at the wide trade in shares of Boeing today, stock was down 3%. It was up as much as 6%. And then it finished the day down 3.2%, probably dragged down by the overall market trade. But nonetheless, that's kind of how it played out today.
Yeah, and the question I'm wondering about the answer to is...
Would you? Well, first of all, would you?
Absolutely, for the same reason that your dad said now it's under more scrutiny than ever before. But the question I'm curious about is, will I be flying on a 737 or will I be flying on a 737 MAX? And I think branding is going to be absolutely important as this story develops.
I wonder, do they change the name?
Well,
you know, a company does that, right?
Well, that's, do airlines want to identify with this? Does Boeing want to identify with the 737 MAX? I mean, aviation insiders know exactly what they're flying, and that's one of the big questions, is branding of this thing.
I'm just going to point out, though, those actions by the FAA today closing out the longest grounding of a jetliner in U.S. history and really setting the stage for other regulators to clear the MAX. So really fascinating story, and a corporate one that we've been watching now for some time, as you know, Charlie. Thank you so much. You are listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day fade on virus worries. Stocks close at the worst level of the session. Stock slumped as fresh restrictions to curtail the spread of coronavirus overshadowed signs that scientists are making fast progress toward a vaccine. S&P closed at the low of the day after New York City shut schools because of rising infections. S&P down 41, a drop of 1.1%. The Dow down 344 points, down 1.1%. NASDAQ tumbled 97, a drop there of 0.8%. Losses accelerating really in just about the final 15 minutes of trading. 10-year down 4/30 seconds, 10-year yield 0.87%. Gold down $10 the ounce, down just about 0.6% at $18.70. West Texas Intermediate crude up 0.6%, up 25 cents a barrel, 41.68. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, it is day 3 of the Bloomberg New Economy Forum. It's bringing together global leaders tackling the world's toughest problems, thinking about the global economy. Last night's programming included former presidential candidate and former U.S. Secretary of State Hillary Clinton talking about the need for another round of economic stimulus. Check it out.
We've got a lot of hard work to do to try to shift the focus to the so-called real economy. And I think that's what you'll see from a Biden-Harris administration, because if we don't get economic activity, particularly in the small and medium sized business sector, going again, if we don't get the support that people in the workplace need, particularly women when it comes to family leave, when it comes to reliable, affordable childcare, if we don't get those pieces in place, then we're going to have both serious economic and political consequences from the impact that the virus has had on an already shaky market system when it came to the real economy.
And that's former Secretary of State, former presidential candidate Hillary Clinton participating in the Bloomberg New Economy Forum. That was last night. You can see more from the Bloomberg New Economy Forum at neweconomyforum.com, Bloomberg.com, and on the Bloomberg at LiveGo. But let's bring back Bloomberg New Economy editorial director Andy Brown joining us in our Bloomberg Interactive Brokers studio. Another great conversation.
A great conversation about financing the real economy. It was one of our big panels, this idea that far too little of the world's savings actually goes into the real economy. Most of it spins around in this sort of internal loop, earning trading profits for banks and brokerages and hedge funds. And it's not going to where it's needed right now, which is to small and medium-sized enterprises. Half of all SMEs in New York apparently are going bankrupt.
Yeah, it really explains kind of the division, also kind of the two worlds that we have right now. We certainly see it playing out in the U.S. I want to get to the pillar that you guys focused on today, which is the climate. And there was some incredible conversation. You and I, even before we got going, were talking about Alan Jope, who's the CEO of Unilever. He had some incredible things to say that really stayed with both of us.
I loved his breakdown on the generations and their attitudes to the environment. He talked about baby boomers. This is my generation, completely uninterested, he says. They don't even pretend. Gen X, hypocritical. They talk a good talk on the environment, but don't really change their behavior. Millennials, these guys are on the fence. They're interested, but don't want to pay more for green. Gen Zennials, this is the interesting one. They're all in, right? He said the consumer of the future, almost the only thing that's driving their brand choices is the positions of the companies and the brands on environmental and social issues. The consumers of the future, these are the ones that are going to be putting pressure on companies to change.
I have to say, I've never heard Gen Zennials. I haven't heard that term, so that kind of just was something I'm like, okay, I'm going to remember that, make a T-shirt out of it, because I just thought it's kind of interesting. I think we're going to be talking about it more. But it's the consumer of the future. Like, that's what companies and brands need to be thinking about, because it makes a difference.
Yeah, exactly. And you know, one of the interesting things about the discussion this morning is the way that the business community and the financial community are looking at all this, not really as something that's coming towards them to which they will have to adapt. They're starting to look at it as a real business opportunity. We heard this from Noel Quinn, the CEO of HSBC. He said, look, you know, the environmental thing is going to be a big deal for us in our investment banking, everything from investment banking to commercial lending to wealth management. You know, and they're looking at loans of $1 trillion or more into this sector.
You know, it's fascinating, Andy, and you've been doing this a long time. I have too, and you go back a few years, and this whole idea of ESG or, you know, socially conscious investing, it felt more like just kind of a good thing, made you feel good to do it. It's real, and you could hear it from these investment folks that were on the panel, heads of HSBC, Scott Meinert over at Guggenheim. I mean, this is real money we're talking about, and it's also investments with real returns.
It is real money. I mean, around the world right now, there is a building consensus that we need a green recovery from this coronavirus catastrophe. Not the way we did it last time, coming out of 2008, 2009, when pretty much everything went into carbon-intensive industries. And Europe is leading the way on this. And Ursula von der Leyen, the head of the EU, she delivered a speech at the New Economy Forum this morning, and she said that 1/3 of Europe's stimulus, and the stimulus is about $900 billion, 1/3, she said, was going to go to green projects, by which she meant things like EV, you know, building improvement, green hydrogen. So Europe is ahead, but, you know, Joe Biden has promised a $2 trillion green energy stimulus. Mixed picture in China, which is what really matters, since it's the world's largest carbon emitter. On the one hand, they're building coal-fired power stations. On the other hand, President Xi Jinping has promised to go carbon neutral by 2060. So that's an incredibly positive sign. Right,
Exactly. That was another thing that came up. I think one of the questions like, can we do this without China, or does China matter? And someone said, well, China matters on everything. Any issue that you guys are talking about today or this week?
If China isn't on board, none of the other efforts around the world really are going to make a difference.
Yeah, great conversations. Andy, thank you so much. I know it's a busy day, so I'm glad you were able to stop by. Bloomberg New Economy Editorial Director Andy Brown, and check out everything to do with the Bloomberg New Economy Forum. As I mentioned, you can find it at neweconomyforum.com, bloomberg.com, and on the Bloomberg at Live Go. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli. It is coming up next. And we're also going to break down NVIDIA earnings, crossing the Bloomberg terminal, seeing fourth quarter revenue, $4.8 billion, plus or minus 2%. And that is way above the estimate. We'll break it down right here on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. I've been dying to do this story. It has to do with Taylor Swift. My daughter is a Swiftie, and so it caught my attention when it crossed the Bloomberg yesterday. But there's a great column by our Alex Webb about Taylor Swift bulletproof investment. So we'll get into that in just a moment. First up, though, back to another Swiftie. That is Charlie Pellet. Come on, who doesn't love Taylor Swift?
Who doesn't love? I could not agree with you more. Here's what's going on with the Dow, the S&P, NASDAQ all slumping today. Fresh restrictions to curtail the spread of coronavirus, overshadowing signs that scientists are making fast progress toward a vaccine. After the bell, at the bell, Fannie Mae and Freddie Mac will be required by their regulator to hold hundreds of billions of dollars in capital to protect against losses, a step considered crucial to freeing the mortgage giants from U.S. control. Now, the S&P, though, did close at lows of the day after New York City shut schools because of rising infections. S&P slumped 41 points, down 1.2%. The Dow down 344 points, down 1.1%. NASDAQ down 97, a drop there of 0.8%. Those losses did accelerate really in the final 15 minutes of trading. The 10-year, the yield there, 0.86%. Gold down $10 the ounce now. Spot gold down 0.5%, $18.70 the ounce. West Texas Intermediate crude up 0.5%, $41.64 a barrel. So the Dow, the S&P, and NASDAQ all lower today. Coronavirus concerns an ongoing issue. But what effect will a successful vaccine have on economic forecasts? Catherine Mann is global chief economist now at Citigroup.
You know, the discovery part is as challenging and as remarkable as it's been in the terms of the timetable. The discovery part is about science, and they've discovered it. Okay, fine. Now we have to deploy. We have to get people to take the vaccine, and then we have to have people believe that it gives them immunity, and then we have to have the business response that alters the business behavior on expectation of more robust demand.
And Mann, by the way, was also chief economist at the OECD. After the bell, we heard from NVIDIA. It reported revenue guidance for the fourth quarter and revenue for the third quarter that beat the average analyst estimate. After an initial jump, we're seeing shares trading virtually flat right now after hours. Airline shares today, for the most part, did move higher. Southwest sending another 403 workers warnings that they will be furloughed as the carrier struggles to shave $500 million from labor costs. Southwest today down 0.1%. UAL up 1.1%. American up by 0.3%. Delta, rounding out the big four here, rallied by 0.8%. One quick note about Delta Airlines. It is going to keep blocking middle seats through the first quarter of 2021, outlasting other U.S. carriers because it wants to reassure customers about the safety of aircraft cabins. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that update. Well, as I mentioned earlier, I've been dying to do this story across the Bloomberg late yesterday about the celebrity talent manager, kind of arch nemesis of Taylor Swift. We're talking about Scooter Braun shaking off and selling Swift's master recordings from her first 6 albums to LA-based investment firm Shamrock Capital Advisors. So writing about it as only he can do, noting that Taylor Swift is a bulletproof investment, is our own Alex Webb, Bloomberg Opinion, European technology and media columnist, with us on the phone from London, where it's evening. So thank you for agreeing to do with this, because I know it's getting late there over in the UK. Alex, love this story. So why is Taylor Swift a bulletproof investment?
Well, in the virus, we can sort of, in very broad terms, divvy assets up into 3 categories. There are those that have clearly suffered, things like hospitality, tourism. There are those that have done really well, the likes of Zoom and telehealth companies and gold, for instance. And then there are those which haven't necessarily been affected positively by the virus, but equally haven't been affected negatively by the virus, but equally when life hopefully returns to normal, they're not going to see a drop-off either. And frankly, music streaming fits into that category. And Taylor Swift is, of course, one of the most desirable catalogs of music right now. And so private equity is snapping it up.
Yeah, it is kind of fascinating. I think the more that we are unfortunately, in this lockdown, like we continue to see those companies that are figuring their way through or benefiting as a result of it. And you do think about, right, as you say, Spotify, I mean, is one of those that, I mean, we've really seen that stock shoot up tremendously, but the subscriber numbers, you say, are growing at much the same pace as they did before COVID. But nonetheless, people are thinking about content to put on these platforms.
Exactly. And so this fund, Shamrock Capital, which actually is originally the family investment vehicle for Roy Disney and his heirs, they raised their second fund this summer to invest in content. That's not just music, that's also film and video games, in fact. But the lion's, or certainly the biggest investment so far, we don't know how much of it's going to be funded by debt, but they're ponying up $300 million for this Taylor Swift catalog. It's their first 6 albums. And it's also a remarkable piece of business for the Carlyle Group and Scooter Braun, because they acquired the whole label for $300 million as well just a year ago. So they also have some big smiles on their face.
Hey, one thing I got to ask you, because you say it's bulletproof investment, but my daughter's really into Taylor Swift, so there's been a lot of Taylor in our house, and I like her too. What's interesting, though, is she has been in a battle with Scooter Braun, really kind of ticked off that she has basically lost control of her music, and she has talked about re-recording those early albums and then putting them out again. Would that reduce potentially the value of this investment?
I think it would. It would certainly, it certainly limits the upside, I would say. You know, I think in an ideal world, she would be helping them promote the music because, of course, she will still get a cut from the publishing royalties. And, you know, unfortunately, she's not willing to play with them on that because Scooter Braun is still going to be getting some sort of residuals from any further plays as part of his deal with Shamrock. Nonetheless, I think as a listener, there is still great loyalty in any you know, music to the original version, and so while around the edges it might reduce a little bit of the upside, I really don't think it's a death knell.
Well, I love this story. I love it because you're right about Taylor, but I also do love this kind of big takeaway that you talk about this third category, as you mentioned, of companies that have profited more modestly from the pandemic, but they're unlikely to see their businesses negatively affected when it's over. It's an interesting way to kind of look at this market environment. We just have about 30 seconds left.
Yes, and I think that, you know, the key point here is the steady, predictable returns. Spotify is quite a good business, not profitable at the moment, not generating great returns for shareholders beyond the stock price. And so that's, I think, the great appeal for private equity.
Do you have a favorite Taylor Swift song?
Is it too embarrassing to say that I don't know her catalog that well? But let's shoot for London Boy, right? Because that's really where I am.
Yeah, I mean, come on, Alex. She dates somebody from the UK, right? For a long time.
Literally from where I live, from Suffolk Park. So, yeah.
Shame. All right, Alex, thanks for sticking around for us late into the evening over there in the UK. Alex Webb, European technology media columnist at Bloomberg Opinion. Check him out at ATB Web on Twitter. Let's get back to world and national news. Back over to Ed Baxter. Do you have a favorite Taylor Swift song? Don't fail me now.
That's pretty personal.
Oh, okay. Fair enough.
By the way, I want to say hi to Alex, my good buddy. He was in San Francisco for a while.
He's a good guy.
Great guy, yeah. President-elect Joe Biden is incrementally stepping up his calls for information about COVID-19 from the Trump administration.
There's hardly been a meeting that's taken place in the White House about any of this. But I'm convinced that we can get it done.
But to do that, he says he needs to know about stockpiles.
The idea that hospitals should have to compete with one another to get PPE is bizarre. That shouldn't happen at all.
And he says Republicans need to step up and tell the Trump administration to look to the good of the nation's health. Georgia's completed its recount early, step towards certification there. New York City is having to reclose its schools again.
Unfortunately, as of today, on our 7-day rolling average for coronavirus positivity, New York City has hit exactly 3.0%.
And the governor, Andrew Cuomo, says until there's a vaccine available to all, it's up to us. And he has an interesting metaphor.
It's all self-imposed. It's all self-imposed. If you didn't eat the cheesecake, you wouldn't have a weight problem.
Think about that for a second. And a major step today with FDA approval of home tests.
You get this home kit, you swish it around, you put it in a little base, and you get a result that says positive or negative. What's really interesting about this kit is you actually are getting the kit at home, and you get the results at home as well.
Dr. Alok Patel says you need a prescription. And New York Mets second baseman Robinson Cano has been suspended for the entire 2020-21 season, performance enhancing. In San Francisco, I'm Ed Baxter.
All right, Ed, thank you so much. Just want to add on to some of the virus news that Ed was talking about. The World Health Organization's emergencies director warning today that vaccines would not arrive in time to defeat the second wave of the COVID-19 pandemic. They are saying that vaccines should not be seen as, quote, a unicorn magic solution. And countries battling resurgence of the virus would once again have to climb this mountain without them. So I'm reading this story coming out of CTV News. So I just wanted to mention that. All right, Charlie Pellet, come on in on a story that has caught our attention by Jenny Serrain and Mark Bergen. It's about Google coming to a checking account near you.
Indeed. What a great team, by the way. Jenny covering a lot of the finance companies, Mark covering technology for us. And it is. And it's, it's another step. This is another milepost on the road to a cashless society, in my opinion.
I'm all in, man.
You are?
Oh,
yeah,
totally. Totally.
I am, but I travel with cash in my wallet just in case, and even then I've still got a crisp $100 bill that I keep tucked up, even in case of an additional emergency. So
yeah, I do try to think how my parents would have dealt with this. Like, if this. They're not here anymore, which is unfortunate. But I mean, I just try to think about how they would be, because you just never went anywhere without cash in your pocket.
Yeah, exactly. And you know what? My son is 100% in on going cashless.
Totally.
Yeah, except for when he loses the phone, or the phone drops or breaks.
Yeah, that's not good.
Then
you're stuck.
Then you're stuck. Without that crisp $100 in your wallet. But,
exactly. Well, then you're going to go to a cash machine, and they're going to have eye technology, and you're going to look into the machine and say, "I need $100," and it's going to come out.
Exactly. And you know what? I know that the tech-savvy listeners in our audience say, well, yeah, but what happens if your wallet gets, your pocket gets picked, or you lose your wallet? So,
all right.
Touche.
So, listen, we didn't say the story, but Alphabet unveiling its long-anticipated expansion of Google Pay. It's partnering with banks and retailers. It's going to offer consumers new forms of bank accounts, cards, and discounts. I just thought I'd put it out. You have Apple Pay, don't you?
I don't, because I'm in the Google environment, and just in case you didn't ask, shake it off. We'll leave it there.
Shake it off. Check out that folklore album. I've listened to it many times, courtesy of my daughter. You're listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After the bell, we heard from NVIDIA. It reported revenue guidance for the fourth quarter and revenue for the third quarter that beat the average analyst estimate. It sees fourth quarter revenue at $4.80 billion, plus or minus 2%. Checking NVIDIA shares after hours, looking at a drop right now of 0.23%. NVIDIA shares have been swinging between gains and losses after hours. It was a down day on Wall Street today with the Dow, the S&P, and NASDAQ all slumping. Fresh restrictions to curtail the spread of coronavirus overshadowed signs that scientists are making fast progress toward a vaccine. Pfizer shares up today by just about 0.8%. We saw the S&P slump 41 points, down 1.1%. The Dow dropped 344 points, down 1.1%. NASDAQ down 97, a drop there of 0.8%. If you were watching the GIP chart on the Bloomberg throughout the day, you would have seen losses really accelerating in the final half hour, final 15 minutes or so. Gold, spot gold down 0.5%, 1871 the ounce. West Texas Intermediate crude up 0.4%, 41.60 a barrel. 10-year yield there again, 0.86%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've seen that trade a lot that last hour or so where things really either take a leg up or a leg down. So thank you for that. You're listening to Bloomberg Business Week. Right now at this hour, we're watching Charlie breaking down those numbers from NVIDIA. The stock is moving a little bit lower. Let me just do another check on the trade. It was a little bit lower. Yeah, it's down about 0.25% here in the after hours. Keep in mind, though, it has been on a tear this year, like so many of the chip names. It is up specifically, though, up 128% so far in 2020. NVIDIA, here's one of the big red stickies, as we like to say at Bloomberg, sees fourth quarter revenue $4.8 billion, plus or minus 2%. The estimate of the street at $4.41 billion. So NVIDIA forecast topping analyst estimates on PC data center demand. Let's get into it with a fave of ours. Dan Morgan is back, Vice President, Senior Portfolio Manager at Synovus Trust Company. Roughly $17.1 billion in assets under management. Back with us on the phone from Atlanta. How are you?
Hi, Carol. You're going solo now.
I know. My buddy left me.
I know.
He'll be.
How could he do that?
He's around. He's still part of the family. Okay. Just moving parts. First of all, you guys okay? Atlanta, I feel like between election results, still got Senate races
coming. We're trying to figure that out.
We're still trying to figure that out. I know. And then you've got virus cases. I mean, it's rough.
Yeah, lots of fun in Atlanta, right? In Georgia. I guess we'll know more on January 5th, right?
We will. All right. We know more, though, from NVIDIA. They came out with their results. How do you see it?
Well, as you were mentioning, Carol, I mean, a huge beat in terms of guidance for that fourth quarter, but again, just a company that's really executing on all cylinders and just a dynamite report. I mean, data center revenue, $1.9 billion. That's the chips that go into the cloud. The estimate was at $1.8 billion, and then gaming, $2.27 billion. Estimate was at $2.10 billion. And it's interesting because gaming revenue actually exceeded data center revenue. And in the last quarter, we actually had more revenue from the data center group. But really across the board, Carol, when you look at these numbers, the guidance for the fourth quarter, the beats on their two core product areas, it was just a dynamite quarter. Really, for NVIDIA, it'd be very difficult to find any sort of fault with this particular quarter.
Well, and I would say our Ian King, who you know really well, covers semiconductors for us here at Bloomberg. He writes, the CEO has parlayed strength in graphics processors used by gamers into a growing position in the market for chips that handle AI workloads in data centers. I mean, it's a really clever pivot.
Yeah, you're right, Carol, and it's interesting because they seem to be in all the right areas, right?
Yeah.
They're in artificial intelligence. Well, that's one of the hottest areas, right? They're in the build-out of the cloud. That's one of the hottest areas. And then they just came out with the new Ampere GPU chip, which is one of the hottest graphic chips right now that's being highly demanded in the video game area. And that's another thing that's really growing for them. So if you think about the chip space, Carol, and we think of like autos, industrials, and PCs, really not growing that much. But then we think about 5G, we think about data center, we think about artificial intelligence. Those are all doing great. And guess what? NVIDIA's in all the right spots.
Talk about right. Yeah, but having a strategy, right? And really just it's working out, and it's being, as you said, in the right markets, either having vision or having, some visibility about kind of where it's all going. So how does that, we've talked about this with you before. How does it contrast with something like an Intel?
Well, Intel, Carol, as you know, is in the same group to a certain extent, right? We know they have their data center group. They compete against AMD in building chips against, NVIDIA for infrastructure as a service cloud, which is where they're all competing. The thing that's really kind of dragging down Intel is this huge exposure to the PC space. And as you know, and we've talked about on the show, that's like a single digit or no growth area, right? It's very slow growth in personal computers. So that's been kind of weighing down Intel, even though their data center group has done extremely well. Not only that, AMD has been giving a little bit more fight to the money, than they have in the last 10 years. So that's been impacting them too. So hence why Intel trades at 10 times earnings and NVIDIA trades at 65 times earnings.
Yeah, right. So there's a little perspective for you, right?
Yeah.
Listen, one thing I wanted to ask you, Apple dropping Intel, not a new story. We knew it was coming. Apple's increasingly working on their own when it comes to chips. But what does it mean to see that changing dynamic in the industry?
Well, you're right. I mean, Apple used to produce their own chips with Motorola and IBM. This is like way back, Carol, because I've been doing this way too long. This is like in the early 90s. And then all of a sudden they said, let's start leaning a little bit and using some of the Intel-based chips to compete better against the IBM PCs, right? The Dells, the Gateways, and all those guys. And now they've kind of switched gears, and there's no doubt that the Apple chip is very strong, especially going in the Macs. They also changed their relationship in their modem chipsets, right? They're back over with Qualcomm now on their smartphones. So they've kind of detached themselves, that being Apple, from Intel, where before they were leaning on them not only to make chipsets for modems, for their smartphones, but they were also making the chips that went into the Mac. So right now, it looks like Apple's on their own in the Macs, and they'll still be leaning on Qualcomm for the modem side.
Is the U.S. chip industry strong?
Well, again, it's like, Carol, we talked about the macro picture, right? 2019, the overall, profits in the semiconductor sector were down about 12%. This year, they're expected to be down again anywhere from 12 to 18%. And then we're looking for a rebound in 2021. But again, it goes back to our beginning of the conversation, Carol, and that is certain sectors are doing really well, data center, artificial intelligence, 5G, and other sectors aren't. And